Good morning. This is Fari Hamzi. It's of Hamzi Analytics. This is eight. It's about 8:35 in the morning of October 27th. It's a Wednesday, 2021. As you know, we've started these webinars that are morning briefs, and they get posted on our uh, YouTube channel. That's where you find them sequentially, along with other stuff that we post. But we waited to weekly because I frankly I'm out of time. We're doing it 2, 3 times a week. And we do it in the middle of the week, so everybody's in, everybody's alert. It's Mondays are tough. Uh, as Newman says of Seinfeld, Monday has a feel to it. I got to tell you, after the webinar last night, and because that little issue we had, I was got a little bit upset. I don't know if you guys noticed it or not. I didn't have an answer for the issue. I internalized it. So this morning it feels like Monday. So bear with me. My apologies. But I'm going to resolve it. We're going to find out what's wrong there. Yeah. The drawdown is too high, and there's an issue. We have to find out. It was never like that. You saw the copy in the user manual, user guide. So but I don't want to interrupt the fellow's time off. Although I gave him a little text, I said in the afternoon today we'll talk. I just not gonna wasn't in the mood to get on his case in the afternoon in the evening. So, but as you know, we were all. Yeah, I've been a I had two customers at one time. One was U.S. Air Force, one was U.S. Navy. There's no time and rest and all that. If there's a problem, you're called in. Yeah. So. But we'll deal with it, and we'll post the results, and we need we will have another webinar. We gotta go over that. Yeah, that we cannot have a open item left like that. Anyhow, these are done. So back to you. We've done Friday, Wednesdays. We go through a basic housekeeping. We do econ calendar. We do PMT market timing, and we do overnight very quickly. All right. I went over the housekeeping last week. We also it was price adjusted on options, tremendous results, and also last night tremendous results with the happy. We introduced basically happy proprietary day trading systems. And then the Epic is, I mean, Elite is for the professionals, hedge funds later on down the road. I can't see us in this year. Will be more in January. Let's move on to it. I have nothing else to report. Everything else running perfect, pretty good. Oh, yesterday we had an issue with internet. You saw how we quickly switched over to the first level, which was Verizon as a slave. It's built into the Comcast for Business, and of course I had two more MiFi's available. Not as strong as what they have that comes with the package, but ready to go for my my own phone Verizon account, just in case. It took us a few minutes, but we recovered quickly. The protocol always is to go flat. You just have to. Something like that happens. I'm in Florida. That could happen. Power-wise, we have power distributed. UPS has a heavy machine. Some of the extended batteries and so forth. So we try to think of it, but we do need these issues. We learn. Or Friday, you saw what happened on Monday when we had a problem with the uh, uh, go-to meeting. I need to address that. Single point of failures are important in system design. We went through many simulations over at B2, but that was a different project, obviously. But it's still mission critical. Uh, so we've got to prepare for it, and then it happens. It's a lesson. We got to execute well, and we do the best we can at the time. So we switched it. What we did when go to meeting flip, we happened to have a copy over here. A few days back, we really switched to that. We said go there, and we switched to the Zoom. So we've got that practice. Next time we're going to be even better, so forth. And maybe one time we will do it as exercise. Remember Captain Ramsey? Yeah, he has a fire in the galley, and he does a missile test. So we may have to do it just to get all the team together, do it right. All right, econ calendar. Today's Wednesday. It's the last week of the month of October. Obviously, we're going to have some key numbers coming out. Let's see. Durable goods. It just must have come out. That was a ring. I have a ring in the machine here to ring at 8:30 because that's the data. And of course, EIA later on. So let's see what we got. Durable goods is a key view of going forward. The main economy moving forward. This is not good, Jack. Okay, this is not good. All right, this puts the Fed on hold. Yeah. Look at what we had. 1.8, 1.3 is revised. Remember, always look at for revisions, especially these key numbers like this, like GDP, like non-farm. So it's down half a point revised. Consensus 0.9. We came better. It's less negative. Okay, but this was revised. This is a low number. We came better. Okay, I get it. X transportation. This one up. This is mainly in line, but look at the range. Yeah, yeah. Core capital goes 1 to 1, 0.5, 0.6. Okay. 0.8. Nice. Okay, we have a little uptick there. Good, good. All right. Going back. Let's go to trade. Come on. Mm, 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 mm. 86, 82. Yeah. Yeah, well, we're importing more. We're importing more. Yeah, and probably some of us are still staying offshore. That's not good. Yeah, yeah. What happened to truck drivers? You know, you got all these guys who are trying to get S&P 500 in the pit. Send them back. A lot of them came from truck driving. But send them back. Yeah. Tell them they're doing it for the nation. Yeah, sure. Yeah, right. Yeah, remember the P&L has changed. GDP. That's for tomorrow. That's a big number. 6.7. Last one. Wow. Wow. Holy mackerel. Well, that's a prior quarter. That's a prior quarter. Okay. Yeah. That's prior quarter. Yeah, that's second quarter. This is third quarter, right? This is end of October. Yeah, this is so. This is reports through what we did in the summer. Okay, well that makes sense. Okay, that's possible. I thought it was huge. And look at that range, and this is where we're at in the middle. Okay. PCEs. Remember, this is something that Ben Bernanke used to look at. 12% prime. Jeez, jeez, look at that. Wow. Wow, rough summer. Okay, we'll see. We'll see. Wow. Okay, jobless claims. That's going to be big, but it's too noisy. Let's see what it's still forecast. 290, 290. Okay. Yeah, yeah. Listen, we need at least those 250 above. Just no, that's non-farm. Sorry, I mixed the two. I need more coffee. Yeah. Existing home sales. Remember, fourth week is dead intensive. Fourth week. Okay. First week he's got some non-farm. Second week you got some PPE, CPI, PPI, not PPE, CPI, PPI, and then you got expiration. Then you get this. This becomes a heavy data part. 1.7. Oh, Murray, month over month. Okay. Oh, Murray. Oh, Murray. Okay. Jesus. Okay. Well, we'll have a little uptick in the rates too. Remember, don't forget. Okay. We're done there. Employee cost index. I don't look at the black reports. I look at green and red. Okay. ECI, employee cost index. Yeah. Quarter over quarter, 0.9%. Go next 3 points in the second quarter. Okay. This should be a little bit better. That's the range. Okay, I get it. All right, we'll see. And then personal income. That's probably crucial at this stage. Very noisy though. Very noisy. Look at that. Yeah. No, that was in 9.2. All right. Another funny, but you get a little picture. Who's speaking of all these characters that we have hired and paid for? Nobody. Why? Do we have a Fed meeting coming up, so they're quiet? Okay. There's nobody speaking. Are they on vacation now in October? That can't be. Okay. Let's see what the rig count is. They should be busy now, right? 706 prior. Okay, all right, we don't know. That's just a prior. All right, good. All right, let's move on. Let's go to charts. Phase 2, okay? PMT charts, timer. All right. By the way, interesting discussion we had last night, if you remember, about this area or even this area. But, or we should really, what we saw on the screen was here, this area. Whoa, you see that? The daily range was so small, it's just normal. The ORB, opening range breakout is not going to do well. But we have all kinds of markets out there. There's got to be some times like that. Yeah. Now, the issue is the sequential. Maybe you guys see there were a couple of flags for reversing. Maybe can you trade sequentially? Can you take more than one trade? I got to take a look. Or maybe there's an error. I don't know. But it wasn't the case before. So maybe probably something I did to it. Once I received it, I was playing around with it. Remember, I showed it on this machine to you. But in the what do you call it? In the user guide, it was correct. It was a 600 contract, of 18. So we'll figure out what's wrong. We're gonna adjust it. We're gonna give you a demo. I will go over the cause. So nothing beats transparency. All right, new highs, double high on the double top on the and the X. I'm not saying it's gonna top here. I'm just saying we just touched it. This is all-time high. New highs there 3 days. I've been wrong. I went flat over this area and still going out. Now I'm scared to get long, so we'll see. Yeah, why? You see that mode? This is McClellan oscillator, and we're beginning to diverge slowly. Yeah, we're not going to new highs or new levels even relatively to this area. So why? Big names. Big names are moving. The small names are not. The advanced decline is not confirming the move, which is a morning, Yusuf. How are you, sir? For the system. Okay. Also, take a look at what CIs are doing. CIDFs are doing. Oh, by the way, a question came out last night. I just want to quickly address it. When do you think we're gonna have an automated system available? It'll be probably January. But as you see, we still have some snacks we have to watch. But we made you part of a team, learning how this process is and appreciate what's involved. It's not an easy task. Actually, one person actually volunteered and said, "Hey, I've done some program. I can help you out too." I said, "Sure, absolutely. It would be more comforting to know that." But before we get to run an essay, we need to get you running these a little bit, okay? So to see what your issues you have. I'm not trying to sell you this. I can comp you that. That's not a problem. But I want to see how you do. Because if you can't get these going, you can't run the system. Okay. So it's a prerequisite, if you will. Anyhow, take a look here. We're dropping here on CIs. I mean, one of the things, obviously, you got to understand the CI part of it. Yeah. And the vol and that, so on and so forth. But we'll get there. Canaries. All right. Nice move by transportation. This is very encouraging. I've been watching it, but I didn't know it hit the high. Look at that. So this next 2-3 days are going to be absolutely crucial. What this baby is doing. Look at that bar. Look at that bar. Okay. Let's go to DT. I prefer that a little bit easier. And look at that separation of the two lines on CI. That's crucial. Get your eyes used to that, please. Okay. Not because it's my indicator. No. But it's such an easy indicator to understand. As what is it? Ken Simmons once said. He says, if I could look down, he was saying, if I look down at this, okay, I can almost tell what this is going to be. Because the tempo this ass tells you. Of course, he's a very, very outlier person. Actually, his email is outlier Ken. Yeah. Outlier in terms of, he's a genius. There's no question about it. He's an absolute genius. I mean, there are a few guys that are extremely well I've run into. Peter, Ziriat, Ket. I would say these three are just top of the list. And that was an interesting comment he made. Off the cup, I didn't even know he said in the webinar. He didn't check with me. I didn't authorize it, but he didn't need my authorization. He was speaking his heart. He says, that's what this thing does. And it's true. Because he's used it for years. And even though he's taking care of his mom and dad right now, he still gets the indicators from us. Yeah, yeah. The other day he was telling me, he says, I was on a laptop in the hospital, or the senior care facility, and I'm looking at the trades. I said, good. But you're there for your mom and dad. He goes, I know, but I'm doing both. Okay. All right, D-Trender, new high. Look where we are. If you put it back, let's see where we are. We're not ready yet, and usually this takes a while to catch up. But it's separating to the upside, the positive. If you do a count, we're all positive, right? Yeah, okay, so 8 out of 8 were positive. I would watch these two more than anything else. They got 9.9%. Okay, I think the max we had here was like 30, 25, 30. We're not there yet. Okay, this teacher that tells you what the bigger guns are going to be doing. Another one that's crucial is this, baby. Yeah, look, we hit 40 on this. This run up was so fast. We knew Nasdaq is going to come. These two go together. These two go together. This is transportation, discount of the economy going forward, because now, especially now, everything we need has a transformation component in it. So, and part of it is also transporting oil. Don't forget that, because of EPA issues we've had. We cannot. We should have more. In my opinion, we should have more environmentally sound pipelines, but we have a lot of rails. And if something goes wrong with the rails, it's much bigger damage, as you have seen some movies. Not, I mean, like videos, not movies, but I mean, um, what do you call it? I forget CCDs. Where it's more of a watching after the rails coming in and leaving, and something has happened, or we got derailed here. So. Oh, okay. Now NDX up. Okay, so let's see what happens up here. Let's see what happens there. These are target 2360, 16170. You might want to put those numbers in your machine to give you alert. Okay. They're not in, as I showed, they're not in any alarming way yet. Okay. None of these are. Okay, but we could be going up. The question is why? What are we doing for this to go up like this? Okay. Morning, Hamid. How are you? Morning, Dennis. Remember, these are Wednesday mornings. David Brown, welcome, sir. Remember, these are Wednesday mornings. And once you register, it's good for the balance of the year. Hi, Jim. How are you? Welcome, guys. All right, so we're at the third screen here. We already went through a little briefing. It's being recorded. We're going to give you that anyway. Econ calendar, we're on PMT. And we try to finish these by 9 usually, 8:30 to 9, every Wednesday. Okay, the mechanical system is buy and buy. This is a long buy. This is weekly. It's going to be long, always has. But and this, like last time, at the very end of the drop in March of 2020, it went short. Why? It's a trend following. It takes a while to confirm that's what it's supposed to do. So it got inverted. So when it went short, it took. Remember, the drops are heavy. This is weekly. The fear takes over. The drops are big bars. There was a sense that it could be inverted. If you go back to our webinars, you could probably see. I wasn't sure, but I thought it's possible. Of course, 2 weeks later, that's exactly what happened. Why? I don't change the parameters. I keep the same indicator. I learned a long time ago, just like systems. If you change the parameters, you're curve fitting the indicator too. So you want to show what you're looking at now. So these charts, this has been there since 2008, 2009. I mean, this was developed in 2008 on a flight from New York to Chicago. Is it Chicago? Yeah, I think so. Anyhow, you just keep it up. Don't change it. We have scrambled the data a little bit better because so it becomes meaningless because we're not trying to say what it is, but you could see. Okay, here's the problem. We're not going up. We got to 8. I think it was a couple of days ago I talked about Momo. I just looking at the chart, sounded to you guys what I'm doing. This is what I see it. Yeah, this is at 0.8. It says. I mean, I was at 8. We did not get higher, and it's pulling back. We're at all-time high. This is your first divergence right there. We're pulling down again. Now, this has to do with the modified advanced decline of S&P 500 names, not all of the market. This is all of the market. This is bonds. There's a lot of garbage in there. It's tough to manage that because it's all NYSE. This is all Nasdaq. You got a lot of stuff in there, some garbage. This is S&P 500 only, but it's modified, and we overlay the special version of Sigma channels, so we can see the vibration in the advanced decline itself. You see it? You see the bounce? -2, -3, almost -3, -2. See that? Yeah. And we're getting now at negative +2. So have not touched it since 2008. And what happens? I can sense it because there's no change in the indicator. The change in the data triggers the right response in your mind. Does that make sense? So it's crucial to keep, now, how do you know what to use? This is a very tough order. Say, hey, get an indicator, but don't change it and sit there and use it. How do you know if it's wrong and you're going to have what makes you get over the fear that if it's a wrong data, you're not going to get your ass kicked because of your account size? Well, that's a big fear. So you got to select your indicators carefully, and they better be balance tested. Okay, I'm not saying mine are. No. I'm just saying general. You've got to be balance tested, not just any indicator. I get 5, 10 indicators a month recommended. Either people wrote it or somebody looked at it or somebody's like, okay, until I balance tested myself, I can't put much credence on it. I'll start. There was one of you sent me, one of the persons here, sent me a note the other day. And I wanted to take a look. I put one on my screens. I'll keep it looking. I'm not going to adapt to it, but I'm going to keep looking. See, especially in a market upheaval, some move. Not to say this, we're not going to get that often, but somewhere even like this, see what he behaves. We're coming in from one top, going to the other top. I want to see here. I want to see down here where it's basing. I want to see it up there. Then I take a look and say, okay, maybe it's good. Oh no, it's garbage. Not me. Boom. Or it's over my head. Sometimes it's over my head, so I gotta let it go. All right, next item I want to look at is this one: 52 weeks high and low. Learned a long time ago how these things peak. Okay, and let's go back. You can see the peaks, but these peaks, market peaks after it. So market will still continue to go higher. Okay, and of course this is too far. Usually like 60 days, 90 days. So this is peak there. We already have our drop there. Okay. So this, I suspect this to continue to rise a little bit. And you see the corresponding inversion on the bottom. These are the weekly lows. The weekly lows have to drop. Okay, so this is for topping. This is for bottoming. You see that? But these start rising. Now the number scale is different. If you go to our PMT chart, there's a discussion of that. But historically, what you should have. Okay. Evolves. Okay, we're in the channel with the VIX. We're at -1, -2. Try to base look at what CI is telling you. Okay, that's fine. So that means we're probably topping on the market because it's an inverted asset, right? So when this is bottoming, top market would be topping. We're getting a doji there, all right? So keep an eye on that. I'm not going to be, I dropped CL. I'm not touching CL, so that's one of the last types. Last ones you're going to see Z in there. I don't know. This is derived from US, so I don't know. I may just let it go. I don't put much credence in this because of especially against the CL. You see that? It's just it doesn't make sense. The sequence is not in line because this is all for US. So they can. This is SIBO because it's got an old VIX calculation, and then this is COMEX, part of I'm saying NYMEX, part of CME, rivalry across the street. And to me, the USO calculation is wrong, AETF, because that's a hodgepodge of different futures. I don't like that. So most likely we're going to drop this. This is the last one we're running CL. I dropped the Zoom and just nobody was there. So learn that from Bollinger, John Bollinger. If the product is not responding, don't worry about it. You're not doing anything wrong. Just nobody's in tune for that. Stay with the ones that are in tune. Dow plus 49, Dow futures. All right. This is the VXN. That's the NASDAQ, and this is Russell. These two inverted, reversed. I'm saying it's okay. This is Russell. So we're beginning to see same pattern on the CIs. Okay. This says if you're looking at this fix, though, if this is calculated correctly, this says oil will continue to rise. You could see 90, maybe even 100. Now that's where we're going to get in trouble because when this gets over the 100, we haven't been there in a long time. This baby is going to change. This baby will change. You're not going to have this. I mean, this rise that you see in that is going to be stopped. $100 oil with the economy that's not doing too well, yeah. And Biden will be the butt of all jokes on the late night TV. So that's okay. Whatever, this is his time. He was around all these years, the last 20, 30, 40 years. Okay, show me. I'm not a Biden fan. I'm not a Democrat, but I'm actually trying to be neutral just to see what happens. Because if you don't have a horse in a race, you think about it. All right, 141 here on SQ, sideways. Okay, interesting. It's not rising. Interesting, because you would think up here as we make a new high, the big guns will go out. Remember, there's a tail risk on the put options of deep out of money put options for SPX, not SPY, not for the kids. This is for the grown-ups, okay, the hedgies. And this is not rising. Interesting. So they don't think we will have an event down below. It's very event-driven. They're not detecting. The data does not support that there's an event forward. Why are you flat? I'm not short, but I'm flat. Why are you flat, Ferry? I need more coffee. That's what it is. Okay. Moving forward. Remember, this comes at night after the close. One time. One dot. Yeah. Okay. Let me check here before I get into a dissertation here. What's our spread? Nov. Okay, Nov. Okay. Long Nov, short Feb. Okay, that's good. Okay. So we're doing 435 here. That's a 3-month spread. That's a Z. Okay, remember we roll over to H22 on like 8th or 9th of December, so we got a month and a half to go. Yeah, yeah. We move on the 10th. Yes, we move on the 10th. Good. Okay. All right. So December 10th, right? All right. Very, very, very neutral type. We kind of a not. I'm sorry, not neutral, not very. I'm sorry, neutral. Yeah, neutral. Not strike very. Okay. But look where the lows have been and this local highs. Yep, yep, yep. When this drops very low, we're very, very high relatively. When it gets to zero, that's the bottom. Okay, this is negative. Remember that? Yeah. Very pissed off at SIBO for losing that page. We need to figure out what that page is. Where my post is on this. How to use this for the bottom. It was the most. I think I created the problem myself. To be honest with you, it. There's some people who also are within SIBO who post there. We nailed their ass. I mean, we had so much. Part of my French. We had so much hits on that page. These guys were just. Yeah, they're just like, huh? Yeah. So they changed the whole thing, and now we don't know where that page is on their blog, but that's okay. Wish I had kept a copy somewhere. But the bottom line is, it was a case study. I'll do another one. Big deal. I wrote the damn thing. I'll do another one. It shows how to pick a bottom, all right, on the market. So next time as we get near a bottom, I'll take some sequence pictures and I'll make a case. Yeah, I'll make a study and put it on our blog. Yeah, yeah. We don't have the traffic to see what has, but we have pretty decent traffic. Okay, SP2. Watch out. We had 90 guys. 90. 87.60. We had 90. And it's still heading up. Now, this is very sensitive to the action itself. And it's one of the best one I've had for swing trades. I did a very preliminary version of this for Stan Harley. He was my president at when I was at Mask. I was a VP. He didn't know it. It was a fighter pilot. He was a backseat of a F-14. He was a Rio radar officer. Very smart guy. Very smart from Texas A&M. And but he didn't have it right, and he was doing it by hand. So I was trying to short term, never got a feedback. He couldn't run it on his trade station. That was another story. Yeah. So long story short, I didn't touch it for a few years later, and then I said, Farid, you remember that code? Go and revisit. Couple of massaging, couple of stuff I learned on the data approximation that I was using in the CI, and this has been there for at least 10 years now, maybe longer. But it's a great tool for short-term swings on a daily chart. You can use it intraday. You're gonna get into trouble. But and we don't publish the code. We don't give it out. That's why it's a special. It's special. Remember the church lady in Cyanide Life? Yeah, it's special. It's SP2, and you could see near the peaking, and the bottoms are really good. Bottoms are really definitely good. Below 25. I think what was this? 10 maybe. What time is it? 9:06. We got hustle. It was a 15. Yeah, the below 25. That was a 15 reading. One of the lows years back was like 7. I mean that you basically mortgage everything: the wife, the kids, the dog, the boat, the second home, the ranch, whatever you have, mortgage and buy because it's leverage. Remember, we're in futures. Leverage and go, boom, and it just took off like a day later. Took off like you could have. It was rip your. If you were short down there, it would rip your face off. Yeah, the skin will be gone. So. Rendezvous point coming up. Starcar site, start my work. It's Tushar Chandes. I just coded it. He never published any code. He described it. But I coded it as part of our Happy Pro package. Very easy to use, and you have the rendezvous point. There are 3 inputs, and we give it to you because you slow it down a little bit. So you get because otherwise it will be all the same. So you change the input slightly. You slow it down from a slow to medium to long term. When they get together, you have a rendezvous points heading that way. So somewhere in here, we're getting close. Treasuries. Oh yeah, another pulling back. Yeah, this is why we're rallying. Yeah, pulling back. Short term, still stuck. That's fine. Cars, mortgages, insurance products. Long term obligations. That's where they have to park the money. Yeah. And also remember, these 2 act as a index for consumer borrowing. The car loans off of this. X spread above this. Same thing as mortgages. X is spread above that, depending on risk, depending on your FICO. All right. Do you have anything else we're going to go over? No. Okay. Up and down volume. This is this is a 60-minute. Let's go to daily quickly. This is not my work. I just programmed it. This is Larry Research. Paul Desmond, good friend, very good guy, extremely good guy. I think he's retired. Down here in Florida somewhere, I forget. Okay, there we go. Okay, I think it's in the West Coast. And this is the daily. This is the oscillators you want to look at. The key is these areas. When you get to 90%, you see the 80, this is 90, and the 90 up. Okay, it's good buy points. Bo, if you guys remember, Bo was. Oh, this is being. Bo turned me to this, and then we changed a lot on that back and forth. And we also is on our Twitter. If you guys don't follow him, I suggest you guys do. Let me show you. Bo is a really, really smart cookie. Okay. Let's see. But you notice when I post that, I put it also under your private Twitter. Oh, what do you call it? HFT Twitter follows. Please follow. Make sure that you follow the Twitter. Those are your members of HFT. Follow that. Okay, there we go. Here's Norseman. That's it. So look at when I put him. When I go to. Oh shoot! Oh, there we go. That's it. Boom. It's Norseman. If you go there, you'll see. If I go to. Yeah, there we go. Yeah, that's it. Let me link it. There we go. Boom. He's got very interesting. He lives down the street. In Naples, and he does believe you can time the market, obviously, sure. And we've had lunch, but we talk often, usually 2-3 times a week. He's a smart cookie. His family runs a painting operation, 3rd generation. Yeah, so it's basically, and they do very, very high-end homes. I mean, so Anyhow, now here's what I'm talking about. Those of you on ES and NQ, during the trial, we let a lot of people in, not a problem, to get a sense for that. But we're going to tighten back down to paid members starting today because it's just too much work for us, yeah, to keep track of that. But once you're paid, yeah, you're going to be on, and let's do that. We'll let you know. Okay. Let's see. Where's my mouse? Okay, this is three screen. Sorry. All right, I'm back. So the buying pressure. This is from Peter. I have not touched that. I just put it up there. He does long only. I look at long and short. I want to see what the system is deciding. This is your ES. This is on futures. And the trick is this. This stuff. This is an index. This is again Lowry Research buying power, and we're very very lucky that TradeStation has these indices. TradeStation actually is very rich in the data. The data they offer is very rich in terms of it serves many bosses, many masters, if you will. Forget what they call these things. Forget TD. They just don't have anything even close to these guys. I don't know about Interactive. I'm not going to say that. I would suspect too, but this is when you have a good financing. Obviously now this is with Monex, the Japanese company, and steady growth, and so they can spend doing right. Okay, we're long here on that NQ. It's long. Look where it went long. Still long. Yeah, it's very nice. So this is mid cap. This is at Russell 2000. The trick is these components that go to compute that to take that indicator from Lowry and then take that data in. And it's way beyond my pay grade. I'm telling you. I went to Peter. I said, "How do you get this thing done?" He goes, "Hey, we need to put this and this and this there." I said, "Okay, send it to me." Boom. I was running fine. It's just that for me, just like what it is here on SC1 Momo, it's a mechanical system to give me a view. What? Forget what I know. Forget what I'm looking at. Forget what expectations are. Turn those off. This is what the system is telling me. Okay, so it's not a view of what's going on. Now you got to ask me, analysis paralysis, of course, but maybe also it could wake you up. Maybe it's like a glass of orange juice in the morning, in the middle of your coffee, kicks in and say, "Are you looking at this or not?" We need to have that. We need to understand it. So, all right. Some of them are very sharp. It's the noise involved. Look at what it is. Some of them are not. So market texture changes. You're not going to have a constant market texture. If you did, us combined here in the chat room would own half of Chicago. It's not going to happen. Only in our dreams. It's not going to happen that way. So, all right. So, all right. Let's go to the last chart there. That's important. Oh, I close this. Oh, you're such a schmuck, Barry. Okay, we need to go to this one. All right. Ah. Oh, Murray. Okay, hold on. This is Murray. This is a Murray chart. Yes. Okay, remember this is the this is what it is. Percent of stocks over 200 a day. Don't go there and try it every day. You can't. It also comes an hour late after the market closes. What that this number is. It's meaningless every day, but you got to look at it once a week or so. We're going to the two moving averages. Look for separations. The separations are big. The separations here is crucial. It's a tell for this indicator. I've been looking at this at since I got to Chicago, so early 2008, before the troubles. Yeah, and when this thing went to like 5, your heart stops. And look, we did it last year too. I mean, you just say that, okay, we're not gonna sit there. But if you're looking at it daily as not moving, yeah, your heart stops because as it stops down there, index is dropping, index is moving. This is not. Yeah, it's just like we're taking a pause down here. Things are bad. Buddy, I got news for you. It's gonna get worse. Yeah. Now there's a lot of divergence involved. Divergence is crucial. This got to give you signals, and the market won't. This give you signals, market won't, and then so we had this little drop here. But we're not 2008. We're not 2020. We'll have other challenges, but not right now. And things are good. Right? At the margin. I think our biggest challenge right now is not the bonds, it's actually employment, qualified employment. So not economists. I'm just looking. Last but not least, hold on. No, guys, I'm not running this right now. I mean, I am. It doesn't kick in yet. This is live. I gotta fix that. But I will bring a chart from the main machine. But you notice that we. I want to look at this chart. We added, some of you guys are in there right now. We added a dome in there. Okay, the depth of market right in the center, as I showed on those pictures last night. Basically for one reason only, so that this is what I'm talking about. This one, we added this. We clean up the the type font size, so you could see as the order gets filled, you can see where we are, what the PNL is, how it's moving up and down, and the stop is coming or not. The trailing stop starts moving as it moves up and down. Okay, we'll experiment. If it's good, we keep it. If not, we drop it. No biggie. Okay. Yeah, but this is overnight. We want to look at it, and we're done for the charts. 5.5. This is it. 30 minutes. You could see the bounce here. Let's see. 7 this morning, ahead of the number at 8:30. That's 8:30. We moved. Okay. Yeah, this is at 9:50. We gotta go, guys. Okay. So this is 21. This is Z, and this is RTY. I'm sorry, NQ and RTY. All right. Any questions for me? Again, these meetings are standing meetings. They're available every Wednesday. Once you add your name, it'll be there. I think I don't know how much we can extend it. I think once a quarter we can. So we'll see as we get to end of December how to extend this forward, so the momentum continues into Q1 2022. Okay. Thank you all. Any questions? I don't see any questions for me. We'll see you on the other side, and we want to finish this, get out, and do a post processing and posting it on the YouTube. Thank you. See you next Wednesday.